It's a buyer's market, no problem. When a market has shifted to buyer's marketplace, the mood can sour because a buyer's market lacks the energy and urgency of the seller's market. The attitude of everyone, sellers, buyers, agents, can deteriorate precipitously. You have to look at the positives and the opportunities when gripped by a buyer's market. One clear opportunity is the investor niche of the market. When an investor sells their property, they have created liquidity and locked in their long-term gain that they achieved in the appreciation of their property. They have reduced the risk of further reduction on their gain and locked in their appreciation of that asset. In the early stages of a buyer's market, having an investor sell their property can save them from a 10, 20, or even 30% drop in value. For investors who have multiple properties or are in retirement or nearly retirement, selling even some of their assets can be the insurance against cataclysmal events like we had with the foreclosure and short sale meltdown of 2008. Another option is an investor selling on a land sales contract where the buyer puts a substantial down payment down, like 25 to 35% in cash. The seller then receives a steady income similar to when they own the property and received rent. They eliminate the headaches of being a landlord and reduce their risk of the property depreciating. They also only pay the capital gains tax on the amount of funds they have collected thus far. This can reduce their overall tax liability or at least spread it over time rather than a one-time big payment, all while earning interest on the financing provided to the buyer. For some investors who want to avoid the risk of ownership in a buyer's market, this could be the perfect option. This opportunity can also extend to a marketplace where the interest rates have sharply increased, where the cost of money is much higher than it has been previously. A seller would not want to carry paper when the mortgage interest rates are 3 to 4%. That's not a very good return when rates are upward of 6 or 7%. It might be time to get rid of the headaches of tenants and toilets and turn the property into an annuity, paying you each month without the hassle. Let someone else deal with the maintenance and tenant issues. Just send me the check each month. As a teen and into my 20s, I reached my parents sell off most of their investment properties on land sales contract. They structured the contract so that the buyer couldn't pay off the contract until after 10 years of payments had been received. The stipulation graduated them 10 years of payments, so they clearly could budget their expenditures and their retirement plans. They spend years acquiring these properties, renting them to tenants, paying off the mortgages. They then spent years collecting the monthly contract payments from buyers who had put in substantial down payments, so my parents' income was assured. They removed the headaches of being landlords but still received a sizable income each month, playing the role of the bank. Buyers have a larger sense of fear in a buyer's market. Agents have to deal with that fear head on. The truth is, buyers become fourthy in a seller's market. The correct approach to wealth is Warren Buffett's advance. Be fearful when others are greedy. Be greedy when others are fearful. Being a contrarian when it comes to real estate will serve you and your clients well. The challenge is the fear and the dealing with it correctly. To properly handle fear in buyers or in sellers who want to sell to a buyer, you can most discuss length of ownership. How long do they expect to own this home or investment property they are considering? If the property is a home they intend to raise their family in, it's a 10-year property ownership time frame. The perfect timing of hitting the very bottom or even the top of the market is less important. If you take any 10-year period in the history in most markets, real estate has appreciated. The peak of the market in pre-crash 2007 was the highest prices paid for homes in history. Then came the correction of 22% was lost in some markets. Other markets lost 50%. Nationally, in 2017, based on the Case-Shiller Index of Home Value in the 20 largest markets, the market was 4% above its 2007 peak. The Case-Shiller Index is up to 51.7% from 2017 to 2024. A person who held on during the correction was fine. A person who held on until dead spectacular. The vast majority of people buying real estate look brilliant after 10 years. That period of time of ownership allows any negative cycle to be absorbed. I bought a commercial property in the summer of 2007. My timing not have been worse. I watched the value go down for years, eventually dropping to 50% of what I paid for it. I decided to hold on to the property and just write the value down with the expectations it would go back up. I could have given the property back to the bank or done a short sale. Those were options at that time, and many people were taking advantage of them, but I knew my loss in value would be restored if I held it long enough. I also know that by using a deed in lieu of foreclosure or short selling the property, my personal credit and FICO score would be severely affected. I would lose hundreds of points on my FICO score and be unable to buy property for a while. In short selling a property, you secure a buyer and then ask the bank to take less than what is owed on the mortgage. The bank takes the loss rather than the seller. Given the then current nature of the marketplace, with large inventories of houses, commercial buildings, and apartments selling for 40, 50, and 60% of previous value, I needed unblemished credit so I could acquire assets in the heavily discounted market. It proved to be the correct decision because I was able to secure numerous investments properties that more than made up for the poor time on my summer of 2007 purchase. I continued to make my payments, collect my rents, and pay my taxes. The rents also dropped, so I had a not net negative each month. When that happened, when you fast forward almost 17 years now, the value has been fully restored. My equity after 10 years of paying a mortgage has improved. I have gotten strong tax advantages from depreciation of the building. I recently refinanced the building because of the increase in the value and dropped my interest rate by 2%. I secured a 5-year mortgage that changed my monthly payment by a good measure only because my amortization schedule is so short. I will own the property free and clear in less than 5 years from now and will have made payments for only 21 years rather than the 30 plus that is typical, saving me hundreds of thousands of dollars in interest. Do you even want sellers? When it gets more challenging to sell properties due to the buyer's market, many agents shun listings. They feel listings are too difficult to sell so that they stop pursuing them. That is one of the biggest mistakes ever. In any market condition, you want a listing. You list to last in this business. The shift that you make is that you only want listings from people who are motivated to sell. They have to sell or are willing to do what's necessary based on the current market conditions. The people who would like to sell or want to sell, you may not want them as listing clients. Their desire to sell not be great enough. Where to find leads when they're scarce? You can target investors from the seller or the buyer side. You can also target move down buyers. Those who have owned a home long term might have raised their family in the home and need less space. Those homes tend to be higher in price. The type of a seller who sells in the early stages of a buyer's market will sell their larger home for a higher price today than they might in the future. Rather than exposing themselves to a future 10% reduction in the value for their $600,000 home, they sell and downsize to a $300,000 home. If the market corrects 10%, their old $600,000 home will go down in value $60,000, but their new $300,000 home will only go down $30,000, saving them $30,000 in lost equity. That doesn't even account for the lower maintenance costs and tax savings the downsized home will provide. Some of the best lead sources are expired, canceled, withdrawn, and terminated listings of other agents because fewer homes will sell. More sellers are unsuccessful in buying. This lead opportunity is fantastic in a buyer's market. Look for the sellers who have to sell, not just want to sell. In a buyer's market, you can create the opportunity to make more money than even a seller's market by working expireds. See Chapter 11 for more. Thank you so much for listening to this part of real estate. I'm going to take a break and I'll be back with more later. Bye-bye.